Hello everyone, my name is Oleg and today I'm going to be showing you my investment portfolio with my Roth IRA and my trading account. I'm going to show you what kind of companies I'm investing into and how much dividend they pay me every year. With this being said, let's go ahead and jump into the beginning of the video. And for those of you who are using TD Ameritrade, you're going to be able to use the same exact tools. I'll guide you through how exactly you can use the calculator that will estimate the profits you're going to receive just on dividends from the companies that you own within your portfolio, or you can also project how much you're going to be making with something that you're planning on investing into. So let's go ahead and jump straight into it. Just a quick disclaimer that I have to give you, I'm not a financial advisor. This is just solely my opinion about the companies that I am personally invested into. You obviously do not have to do the same. So let's go ahead and start with this. If you have TD Ameritrade, what you can do is you can actually go to Planning and Retirement, click on Income Estimator, and then it's going to take you to the page where you can click on your list, for instance, your Roth IRA list or your default list, watch list, and then you will be able to see how much money you potentially will be making with dividends. So with my exposure of $4,123 on the positions that I'm holding, I'm going to be making about $254 on dividends this upcoming year. The point that I would like to point out in this is that some of the dividends have not been adjusted yet due to the volatility of the market. For instance, British Petroleum have not adjusted their dividends yet, but it's not to say that the price of the shares of the company cannot potentially go up or down. And if they go up, then I will make more money on that than I would make on dividends. So with my exposure of $4,000, I will be making only about $250. So I'm planning on investing about 90% of my portfolio, which is $19,000 right now in my Roth IRA. I'm planning on investing all of that into the companies that I see the most value in. And so let's go ahead and review some of them. I'm actually going to take you to my iPad because it's going to be easier for me to point out the things that I pay attention the most when I search for the companies. So let's go ahead and do that. You're going to have to pardon me my handwriting, but on this sheet of paper, you will be able to see my long-term investment portfolio ideas. And we'll go ahead and start with REITs, right? So real estate companies that invest into real estate. So the first company that I see a lot of value in would be the Realty Income Corporation, so O. The thing that I would like to point out here is that on this iPad, we'll only be looking at the graph. We're going to do the evaluation of the company based on its technical analysis, not its actual fair valuation. That would be a little bit deeper of a research, and I can do it in a different video. But the first thing that I would like to point out is that this company existed since 1994, and it's been steadily growing, and it was able to go through a recession time and was successfully able to increase in value ever since then. So it had its peaks and it had its valleys, and with this, it was able to drop to $55, which is basically the same price that it was back in about 2016. And right now it's valued at about, I want to say today it was about $56 per share. They pay fairly high dividends, so 5.17% on dividends. And I do see a lot of long-term value in this company, so I am going to be investing into this one. The next company that I would like us to pay attention to would be the LTC company. So this company was also able to go through two different recessions, right? So the first one was back in 2000, so the dot-com bubble, and then it was also able to recover from 2008, 2009 financial crisis. Right now it's trading at about $31 a share and drop about 10 years of the price. So it's back in 2010 price range right now. With it paying 8% in dividends, I also see a lot of value in this as a long-term investor. Next company would be the EPR. So this company, I'm actually holding in two of my accounts. I love this company simply due to the fact that it went through the first recession, second recession, successfully recovered, and it's been going up. And right now it's valued at the same price that it was before back in 2007, 2008 financial crisis, right? So with it paying 20% in dividends, I'm assuming that this number is going to change. They will have to adjust it. I believe it was changed actually within the last couple of days. But for it to be worth $20, and it was just trading a couple of months ago at $66, I do see a lot of potential in this company. I think I hold about 100 shares of this company in my trading and in my Roth IRA account. So I'm going to be following up on this one and most likely swing trading it and consistently dollar cost averaging on some of these. Third company that I'm currently looking at, and I haven't invested too much money into this one because over the past 5 years, it has actually been dropping in price significantly. And it was also trading at about the same price range back in 2007, 2008. So it is currently undervalued. but I am slightly skeptical about how it's been going down over the past 5 years. So I am holding on to my money and actually not taking a very big position. With 15% dividends, I think it does still have a lot of potential on this. So MPC is another company. So all of these ones are REITs, and you guys can learn a little bit more about what REITs are. But with this being said, you can always look up the companies that Yahoo Finance also suggests you. So these screenshots were taken in Yahoo Finance. So what you can do is you can actually just go to Yahoo Finance, search for MPC, and then it's going to show you the companies. I believe it's going to be somewhere on the right-hand side. It's going to actually give you the companies that are trading at the same price level or that within the same market. And you will be able to learn a little bit more about these companies on the financial analysis. You can look up their statistics. I also like to look at their financials and decide of whether it's worth my attention or not. But I do like this company due to the fact that it's trading at basically the same level that it was back in 2010, 2011. Bad thing about this is that I do not know how this company performs during the financial crisis. Obviously, it hasn't been public. It existed, but it hasn't went public up until 2011. So with this being said, 11% dividends definitely catches my eye, definitely paying attention to this company. I'm going to be looking into buying some more shares of this one. I believe it went up like 20% within the last couple of weeks, and then it dropped again. So I ended up dollar cost averaging, taking a little bit more positions on this one as well. Next company is going to be Well. Do not like this graph too much. I think it's also skewed because it did not drop this much. And I will go ahead and show you guys the actual graph that it shows on Yahoo Finance. So let's go ahead and jump back into my computer. So here we will be able to see the max history, right? So it's dropping all the way to 14 cents a share, and then it goes up to 54. So that looked really weird to me. So let's go to full screen and see if we can actually determine whether that happened or not. So with this being said, those drops back on iPad, we can see that they happened back in 2016, 2015, right? And those drops actually did not go that low. They dropped back to $59 a share. So basically it dropped to the same price that it's trading at right now, but it did not drop that low. So currently, I think the lowest one from 2009, so financial crisis, right at the end of it, it dropped to $27 a share. And then ever since then, it's been going up, and then it had its peaks and valleys and support line, and it validated the support line multiple times, and then it dropped below the support line, and it finally broke through that support line and it's trading somewhere around it, right? So right now we're going to be seeing whether it's actually beneficial to invest into this company, or we're going to just wait on and see if it's bouncing, consolidates, or we'll figure out the best approach for this. But I think that currently dollar cost averaging is the best way to go with it. So next company that we're going to be looking at is going to be the FRT, so Federal Realty Investment Trust. The first thing that I like to pay attention to is ever since when this company existed. So this company existed ever since May 1st of 73, went public. And then it was basically following the pattern of being traded at basically the same price level. Then it went up significantly in 2008, 2009, and then it valleyed back during the financial crisis, right? And then ever since then, it started going up. Over the last couple of years, obviously it was going down, but due to the percentages that they pay on dividends and due to the long history of existence of this company, I do see a lot of potential of it recovering eventually. So right now, this is something that I'm going to allocate a little bit of my funds to and going to hold on to these for the next couple of years. Next thing that we're going to pay attention to is that we're going to look at some essential companies. So the ones that I find a lot of value in. So as we can tell that right now it's trading at $94 a share. So right now it's actually consolidating and it's planning on either going up, right, or down, but it's basically trading at the same level of the peak that they had back in 2007, right? And then ever since then it went through a recession and then it was able to successfully recover. So now we'll be able to determine whether it's worth investing into long term. With paying 2.87% on dividends every year, I see a lot of value and also a lot of potential for the recovery of this company. So I am going to be investing into this one. I actually have some positions in my Roth IRA account for this one right now. Next company is going to be the CenterPoint Energy Company. So this is a utility company, CNP. With this company, I like the fact that it existed ever since 1970. It went through multiple different recessions. It was able to recover. And the level that it's trading at right now, so $12.48, is basically the same level that it traded at during 2008, 2009. And with paying 9.48% in dividends, 9.48% in dividends, that is so much money. Investing $100 into this company will literally just bring you $10 every year consistently. You invest $1,000, it will potentially bring you about $100 a year. That is so much money. I think this percentage is very attractive, so I'm going to definitely be looking into increasing my position by dollar cost averaging in this company. Next one, we're going to look at SO, and this company I love for 3 different reasons. Extremely steady growth, even during the financial crisis. It existed ever since 1981, and it pays 5% in dividends. That's perfect to me. So I am currently investing more and more into this company, and I'm going to be holding on to this for the next couple of years. Next company from the large brand names we're going to look at is CAL, right? Cal, so Calaris. So with this company, I love the fact that right now it's trading at the price that it's looking like it's a penny stock. But it used to trade almost at $30 and $40 right here, again, back in 2007, 2008. It dropped to the same exact price level that it is right now, back in 2008. Let's go ahead and look at my computer and we'll take a look at their financials right now. First thing that I want us to pay attention to would be the graph that starts back in 1980. So this company has been around for a very long time. It used to trade at about $4 or $5 a share. That's where it found its support. That's where it basically started. That's where it found its support. Never went below, $3, $2. So about $3 range was about the lowest price that I've ever went. So it was trading at $2.50 right after 2008, 2009 financial crisis. Again, was able to recover and actually peaked at $40 a share. Certain people ended up buying it at $40 a share, and then again, it tanked. So the company that has been around for such a long time tanked again to the same exact price that it was back in 1997, 2009. I see a lot of value in the company that pays 5.65% in dividends and is currently trading at such a low value. So I am going to be increasing my portfolio with the shares of this company. So ever since 2017, we can see that this company has been increasing its revenue, right? Every single time. In 2020, I'm sure these estimates are going to adjust and it's probably going to be lower. But such a good company, such a big company that existed for the longest time, see a lot of value in this. I'm going to be purchasing more of this company, right? So if you guys want to, you can also go through their statistics, see what the enterprise value of this company is. Their trailing PE ratio is extremely low right now, so way undervalued. So if you go to the summary as well, you can also check out their 5-year trading price, right? Used to trade at about $20, and right now it's down to about $5.80, right? So with 5% on dividends, I think that's a good company. It does say that it seems to be overvalued right now, so we will be following up on this one. As I said, don't invest all your money based on somebody else's opinion. Invest your money based on your own due diligence and the facts that you take into consideration whenever you decide what you want to invest into. And by the way, this is what I was talking to you guys about. See on the very bottom right here, it's actually suggesting you what kind of companies you've been looking into before and suggesting you the companies that you might find a lot of value in. Let's not deviate. Let's go ahead and jump back into my iPad and we'll finish talking about the airline companies that I see a lot of value in, right? So we're going to look at Boeing first. Obviously, everybody has been hearing all the news that have been coming out with Boeing being down significantly because of the issues with their planes, even before the Rona situation happened. And I want you guys to know that this is one of the biggest companies that I am going to be potentially investing into my portfolio and increasing my positions here, because I see a lot of value in the company that is government-backed company. They pay dividends, and it seems like they have been around for such a long time and provided so many job opportunities for so many thousands and thousands of employees, right? So this company existed ever since 1962. It went through all of the different recessions. Obviously, this graph doesn't portray those big swings, right, of the price. It's relative to the price that it was trading at that time, right? So we can only see the big swings during 2008, 2009, and beginning of 2000s. And right now you can see such a significant drop from $366 right here at the peak all the way down to 124. I think it's 150 right now. So with paying 5% in dividends, I'm going to be increasing my portfolio on this, and definitely something to look into. Next company is going to be American Airlines. Obviously, everybody knows American Airlines. This is something that has been around also for a very long time. Went public in September of 2005, paid 2.5% in dividends. I see a lot of value in this company just because I think it's going to survive this, and people are going to be traveling eventually. So this is something that I am going to be purchasing, despite the fact that over the past about 3-4 years, they have actually been going down. So I am going to be pretty careful on determining how much I'm going to be investing into the company, and actually going to be allocating a certain portion of my account to investments into that one company, right? So let's go ahead and look into that next one. So it's going to be the Delta. Delta is also a very good company. They have been investing a lot of money into their own stocks and doing buyback stocks, and I think it is something that is going to recover at least a portion of its losses right now. It is going to be tough for these airline companies and cruise line, that CCL company, to go and recover to the previous highs of being back evaluated at $53 a share after such a significant drop and such a big scandal around the financials. But if those companies are backed by the government, I do see a lot of potential in investing into something that has been around for a very long time and has been providing people jobs and creates a lot of opportunities for people to travel, for people to work, for people to feel secure and receive their pensions. And the last two companies on my airline list would be the SkyWest, right? So SKYW, that's the ticker symbol for the SkyWest company. It dropped significantly. It dropped more than 60% from its original price back a couple of months ago. And this is obviously due to the Rona situation. They didn't have the same exact peak that previous two companies had. But there's definitely something to look into with 1.28% in dividends. I'd much rather own a company that shows a little bit more potential for growth, and it's currently consolidating between its previous support line right now, right? And even though it only pays 1.28% in dividends, I see a lot of potential for growth and recovery of this company, even if it's going to be choppy. So we're going to invest into this company a little bit as well. And the very last one that we're going to look at is Air Canada. So I think Air Canada is the best one for me to invest into out of all airline companies, simply due to the fact that their financials are better than majority of the companies that I've looked into in the airline industry. And I also love the fact that this company existed ever since August of 2012. They did not buy back as many shares as Delta or American Airlines did, but this evaluation of $16 to me sounds fair. So this was the very last company that I wanted us to talk about, and let's go ahead and jump into the outro. This is going to be the fastest outro ever. Don't forget to subscribe and like the video if you enjoyed it. See you next time.